Audited financial statements. Who cares? Well, today on the Daily Show.
5, 4, 3, 2, 1, 0, ignition, liftoff.
Hey everybody, welcome to the Daily Show, a show not just for rental housing providers, but anybody who is looking to be a little bit more time wealthy, get more white space on your calendar. Welcome. It is a beautiful Friday. My name is Mark Dolfini, your host and your coach for the next 9.5 minutes. We'll call it that. So it's good to see you today. What we talked about yesterday were the 3 levels, if you will, or 3 ways that you can get CPA prepared financial statements. And I had some questions that were really, really good. So I'm going to talk about this. We're going to do a follow-up to yesterday's show, which talked about the 3 levels of CPA prepared financial statements. Now we're not talking about balance sheet and income statement. Yes, we're talking about balance sheet and income statement, specifically, but we're not talking about the different types of financial statements. We're talking about the level at which a CPA will prepare them. Okay, so if you didn't see yesterday's episode, it was about that very thing, where you would have CPA compilations, reviews, or audited financial statements. Okay, now a compilation, really quick, is just the CPA is using the company's own data to prepare the financial statements. There's no level of assurance that the numbers are correct. It's prepared in accordance with generally accepted accounting principles, which is also known as GAAP. Secondly is the review. Now the review, it does have limited testing of certain accounts, maybe material accounts, meaning if an account is way more than what it might look like it should be, like if they've got $1 million worth of accounts receivable, but it's normally a $300,000 business, that's obviously that might look a little bit out of whack. So they might test that a little bit. Okay, so that would be review. It's a very low level review. They're going to check a few certain things, but it's not just a compilation and it's not a full audit. So that's a review, and they will provide a limited assurance that the numbers were prepared in accordance with GAAP, and they will give some reasonable assurance in terms of the validity of the numbers. Okay, an audit is really about being valid. It's really about showing that the numbers that are on there have been tested. They might interview the management. They might interview the employees. They're looking for potential problems of the numbers and what they represent. Okay, so an audit is the highest level of CPA reviewed financial statements. Now the reason I'm telling you this is because I get a lot of people who, especially now, I'm going to stay in the real estate realm for just a second. So they want to buy property, and they generally want to buy it in the name of an LLC. Okay, well, if you want to get that type of property purchased and you want to buy it under an LLC, you're going to have to get financing that's going to allow you to do that, which generally is commercial financing. You're not going to be able to buy a property using a residential mortgage under the name of an LLC. It's just not going to happen. You have to buy it in the name of you as a human being, as a person, and then you can deed it over to an LLC, but you cannot buy it that way using residential financing. Okay, you'd have to use that, and you have to go to the commercial lender for that. Generally, you're also going to have to provide a personal guarantee, but that doesn't get you off the hook. That just it's just another way of doing it. All right. So if that's your plan, well, now let's start talking about audited financials. Why would you care? Why do you care that you might need audited financial statements from a CPA if that is your plan? Well, the reason being is because now I'm going to go back and tell a story real fast. So way back when I was in college at Purdue at the time, and then after that, for a period of time, I also went back and worked for that same company, but it was Union Planners, and then it became Regions Bank. And I worked as a commercial underwriter, which basically means I was a credit analyst. So I would look at these loans that would come through, there were these loan requests that would come through, and just for their viability, like, does this make sense? And we, in terms of what they're showing, to lend them money based on their based on what they're trying to borrow money for. So let's say, for argument's sake, that they were trying to borrow $500,000 to build a small apartment building. Okay, so they're building a 10-unit apartment building for $500,000, for example, and they were showing these numbers. Now, based on the exposure to the bank, okay, so based on the exposure to the bank, there wasn't always a hard and fast rule on this. Now, in some banks, they have a hard and fast rule. It says if you're requesting money over this threshold, you have to have CPA compiled financial statements. If you're looking at it over, say 500,000 and below, it would be compiled. If it's 500,000 to $1 million, then you would have to have a CPA reviewed financial statement. Okay, if it's over $1 million, then you'd have to be audited, just as an example. Now, every bank is different, and sometimes it's just going to depend on the loan officer that you're talking to in terms of what they're asking. And sometimes they're just going to ask it because they feel like they're going to ask and just see if they can get it. Because every time that they can get something that's a little bit more higher quality, or something that's a little higher quality in terms of say, for example, a financial statement, that's going to make it look a little bit better to the bank examiners when they come in and try to rake the bank over the coals. Okay, so that's what we did so not only from the credit perspective, I also was a loan review consultant for an accounting firm, and that's exactly what we would do. We went in there, looked at some of these files and said, look, you're letting this guy have $3 million on personally prepared financial statements. They're not even CPA reviewed. And they wouldn't know any better. They're like, wow, I never thought to ask for CPA prepared financial statements, or CPA compiled or CPA reviewed or CPA audited financial statements. You're loaning them $3 million or $30 million or however much money out. They didn't even know to ask for them. So this is why I'm telling you this now, because having worked in the commercial lending world for a while, that is a thing. That's fairly typical, because they want to make sure that the numbers that they're going to hang their hat on are adequate, are actually right. They're actually true, because they could just say, well, yeah, absolutely, I made $50 million last year. How would they know? Unless it was reviewed or audited by a third-party CPA, where they're going to test the accounts. They're going to say, oh, you're saying you have $10 million in cash. Okay, show us the bank statement that's showing us that you have $10 million in cash. And they may actually call the bank, right? Because they're not just going to take your word for it, or print it off or whatever. They may actually call the bank and submit a written form and say, this is the number that they said that they had in the bank, and this on this date. Can you verify that number? And they will go that far on an audit. Absolutely. They're not just going to take your word for it. They're not going to, because all that stuff can be doctored. All that stuff can be faked, basically. So they don't want another Enron situation on their life, in their world, where they were actually, oh my gosh, all these numbers were fabricated, and they were saying that they were reviewed. So, reviewed or audited. So that's why it's really important that you understand that sometimes your bank or banker may ask for reviewed or audited financial statements, and that is why. It's to help limit their risk, so they know that the numbers that you're showing them are numbers that they can hang their hat on in terms of risk rating and just overall risk of the credit that they're extending to you. Okay? Hope that makes sense. So thanks for reaching out, everybody. That's the best way that I can describe as to why audited financial statements is something that you might care about down the road. But if you would ever like to reach out, if you would like to schedule a call and learn maybe what it is about to work with me, you can just go to landlordcoach.com/connect, fill out the form, and just reach out, and I will be happy to have a conversation with you, and we can talk about that. But right now, I'm going to get my weekend started. I've got a couple things to wrap up here at the office, and I'm going to head out. But be sure to place a value on your free time, because if you don't, someone else will. But most important, there is no amount of money that will make time irrelevant. Have an awesome day. Have an awesome weekend. I'll see you guys next time.